So I think we are live, aren't we? Let's just have a look here. Wow. All right, guys. So welcome. Welcome to today's live stream. I'm just still figuring out this live stream software here. So it looks like we are good. All right. So I think we are live. Yep, we are. All right, fantastic. So it looks all pretty good on everything there. Everything looks pretty good right now, which is fantastic. Alrighty, guys. So welcome to today's live stream. Welcome to today's update that I'm going to walk you through. I'm going to be walking you through the stock market, guys, and what's happening right now in the stock market, and also silver and gold, and also the gold mining index. I really want to focus on that as well too, because it really looks like we are starting to Hey guys, can you just give me a yes in the chat box if you can see the screen and also you can hear my voice? Okay, that way I can just I'm figuring out all this whole live stream thing right now, and yeah, just going with it. So let's just all right, Maestro. All right, Maestro there. It's yes, okay, fantastic. Thanks, guys. So we're gonna get started. We're gonna be looking at the stock market, also silver and gold, and also the gold mining index looks like it's starting to break out now. So I'm gonna be talking about that as well too, and what's really going on with that. And so I'm gonna be really focusing on that itself there. But before I start, guys, let me bring up the typical disclaimer. Let me just bring up, where are you here right now? All right, so the typical disclaimer. Guys, do not place a trade based on what you see in this session today, because trading is risky and it can cause substantial financial loss. There's no guarantees of you making a profit in the market, so just be smart about your investing, be smart about the way that you are trading. And the bottom line is this: every time you get into a position, you need to say to yourself, if this is a losing trade, am I protecting my capital? And so that's the way that it's important for you to do that. Also, guys, make sure you head on down to johnsflashsale.com, where I'm actually running a bit of a sale over the next couple of days, and it's my brand new trading course just for $7. If you need help with your trading, the foundations, chart reading strategies, some trading systems, some mindset stuff, I'll put it all in for $7 just to get you started in the market. So go to johnsflashsale.com for that there. So what I want to talk about, guys, in today's session here, and what I want to focus on here is I really want to focus on obviously look at the stock market, but I really want to focus on what's going on right now with silver and gold, because there's a few things that's happening there right now. Okay, so firstly, let's have a quick look at the Dow Jones and the S&P 500. Let me just bring up, say, this chart here right now. Okay, cool. With the 20, we can see how the Dow Jones has still been rising up. Where we had a little bit of a pullback here. The market closed early today, but we had a little bit of a pullback here. Really not much of a pullback. But what I still do expect, guys, is that this thing to continue running on, at least get to 29,000 by the end of the year. I just think that by the time we've actually spent all this time here going, sideways, that now we've gotten a breakout, that there's a very high probability we're likely to get to the top of this channel with the Dow Jones. If I go to my weekly chart, you can see where I've actually gotten that line there. Actually, if I bring up the monthly chart, you'll be able to see where I've got those lines and how I've got those lines. And you can see how that, let me just bring this up through to here a bit more. All right, so you can see how that we've got a lot of this monthly chart here is really bouncing off here. Really, look at all the respecting all through here as well too. Actually, you guys can't even see my cursor, can you? No. I wonder how do I make that happen with my software? Oh, sorry, let me just do this here. So, all right, can you see? Is that? Can you guys? That's interesting, isn't it? You guys can't even see my cursor. Why not? That's weird. All right. So anyway, so let me continue on here now, guys. Let me just go to to what's happening here right now. I don't know why you guys can't see my cursor, but anyway, we can see how that we had this point through here, okay, and then we had this point through here, and as you can see, right, if I flip this upside down, now we had this point through here, we had all this point through here, all this point through here, we almost touch it through there, but look at this, look what's happening up here, resistance up here as well, and now we had this resistance here as well too. So I wouldn't be too quite surprised, guys, if we actually did go to the top of this channel. Now remember, this is a monthly chart here, so over the next few months, we're probably likely to get back to the top of this channel, especially after going sideways through here. We've pretty much, look at that there, we've pretty much just been going sideways here for quite some time there, through this whole resistance level through here. So we're probably likely to start to see a move up from there. As you can see from this monthly chart here, really a lot of resistance. Yeah, let me just see if I can delete that circle there. Right, so a lot of resistance all through here. Just a real lot of resistance there. And as you can see and now we're starting to have a little falter, and now we're starting to break out now. So again, there's a very high probability we're likely to get to the top of this channel. And where is that on the Dow Jones? It's probably around the 29,000 mark that we're probably likely to get to. Now that's probably not straight away. We're looking at the weekly chart now. So even if we did get a few sideways weeks out of this, then that's still okay, right? That's still good because we're now breaking out and we're probably likely to get to there. If I bring up the S&P 500, sort of similar, but same thing. Sort of similar, same thing. What we're looking at here is, once again, we can see how, look at this monthly. This is a monthly chart. Now, why is this so important? Because if over time the market is presenting an angle or a horizontal line or whatever that's based on that is definitely respecting that market, then the market becomes very, very valid. It started here. Look at all this here. Found major support level through here. Then we started to pop back up again, didn't we? Stop resistance level through there. Look at all this here. Look at all that monthly through there. Then we had a little poke above. Now again, this is a monthly chart here, so daily would look completely different. But resistance through here, resistance through here. So once again, I can't see why we just wouldn't get to this level through here. But once we get to that level through there, if I go to my weekly chart now, once we get to that level there, you can see why around about this level here, once it gets to this level up here somewhere, we know we're likely to see some sort of resistance, some sort of a rejection there. But from that there, guys, what we see today, just a little bit of a pullback, that's fine. I still believe we're likely to probably continue moving forward from there. If I look at the SPY, you can see the volume is pretty low. So it'll be really interesting to see what's going to happen there. And same for the NASDAQ. If I bring up the NASDAQ monthly charts here once again, guys. Actually, you know what? Let me see if I can find... There's that angle there on the monthly chart. Man, NASDAQ looks just powering on, isn't it? Look at that. Isn't that interesting? Look at that there, guys. Look what I just saw. I just found. If you go back, it's interesting, isn't it? Like, look at all this support level through here on the NASDAQ on this monthly chart. But if you go back in time and you find this major bottom through here and you connect the lows, so what I'm going to do is I'm going to connect the most touches of these lows through here. And what I mean by that, if I open up my chart, I'm going to find this low through here and then look at all the bouncing through there. 1, 2, 3, 4, 5 months. Then we had this little bounce through here. So we have these touches through here, all through here and all through there as well. and then all through there as well. But look what ended up happening, right? Look, we got the flash down through here. Now remember, at that time where this last arrow is right here, that's where what? That's where Brexit came into it, right? Remember, that was the whole Brexit. That's where everyone thought the market was going to crash, and all that sort of stuff. So if I extend that now to the right, the reason why that is so important, because once we do get down to there, guess what? We're probably likely to find a bit of a bounce, aren't we? Because this has been such a valid trend line through here. And it's so interesting. If you go to the daily chart now, and actually let me go to the weekly chart. And if you just looked at the weekly chart, and I go back to the time where the whole election was happening and the market bounced here, it's like, oh my goodness, the market bounced. Why did the market bounce there? A lot of the times in the market, you'll see that why the market bounced here, a lot of the times you'll find that there was a major long-term, as you can see there, right? Like that trend line there started back from, let's go back to the monthly chart there. That trend line started when? That trend line started back here in the bottom of 2009. And as we found these support levels along the way, we could have that line through there. So the reason why this line is important now, because if the market gets back down to this trend line here somewhere along the future, well, then we will know that it's probably likely to see a bounce through there. So this is really important. This is something that I teach in that trading course, guys, at johnsflashsale.com, that $7 trading course. At johnsflashsale.com. I teach you a lot of stuff that I'm teaching here right now in a lot more detail as well too. And a lot more other chart reading strategies and trading systems. But you can see that that's what's happening there right now. So if I go to my daily chart on the NASDAQ though, that was the very long-term chart, right? That's where this line down the bottom here. So if we ever start to see a major sell-off with something like this here, which not exactly like that, but if we start to see a major sell-off in the markets, then guess what? Then we're probably likely to find it to be on around about that level there, that bottom level there. It's probably likely to where it's find a lot of support levels there. So it's really, really, really interesting to see that that's what's going on through there, guys. Let me just have a quick look at, say, the transportation average. And by the way, guys, if you guys have any stocks you want me to look at while I'm doing this live stream, then just put them in the actual chat box. And then once I finish going through this and the silver and gold and that sort of stuff, then I'll be happy to have a look at those stocks and to share my thoughts on that. Moving on now through to the transports, though, let's actually bring up this weekly chart here, because the weekly chart is really, really, really important. Once again, if we look at this weekly chart, actually, let's bring up the monthly chart here. And on the monthly chart, I'm going to draw some trend lines. So oh, look at that. Isn't that just magical, guys? Look at that. So what I'm doing is I'm just going to try and get the most touches here. Isn't that just amazing, guys? Like, look at that. This is where it started, okay? Then all we did, we picked up the bottom through here. Okay, we picked up the bottom through here. We picked up the bottom through here. Then we picked up this point through here and this point through here. So this whole level through here, bingo, 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 right? All this level through here is really, really, is so valid, right? It's so valid that's what's happening there. And look at this here right now. So guys, as you're watching this, guys, can you give me an eye in the chat box if you're starting to see the importance of looking at that very long-term picture when you're trading, even if you're short-term trading in the markets, the weekly charts, even the monthly charts, and why these long-term trend lines can and do come into play in the future, even if they are back 10 years ago. Because they just, look at this right here. Look at this last bounce here on the transports. Where did that come from? Right on that line through there. And it's so important, isn't it? It's just so important for your trading because, guys, even if you're trading a short-term trading system, right? When you're getting in and you're getting out on a few days or a few weeks, right? On a few days or a few weeks, that this long-term level through here, if you're looking to trade and it's going against one of these long-term levels through here, then you have lowered your probability enormously, right? Enormously. And so that's for that reason, like with my private clients, right? Now with my private clients, we have a very successful trading system And then what I do is I actually have scans. So if I go to this tab through here, right, and you can see that to the left over here, we have different scans. This is actually what come up today. Nothing for the bearish side. So there's actually nothing. There was no potential trades for the bearish side at all. Some potential trades for the bullish side, and then we had these trades through here as well too. Now, what are these? My scans, me and my private clients, we have a successful trading system, and then I use the technology to go out there and scan, I think it's up to 2,000 or 3,000 stocks, and then it brings back the potentials, and then it's up to me to go through these stocks to look at these, and once I find a good trade, then guess what? Then I'm going to the weekly chart and the long-term chart to see if there's any major resistance levels through there that's going to stop this trade. And if so, I don't take the trade. And that's why I say they're all potentials, because they might be okay trades, but I still need to go through my checklist to make sure it's a good trade and make sure I'm not trading against any long-term level through here. No automatic machine can do that. You can use software, but when you have a good successful trading system, and then I use software to help me find these trades, and then I personally manually go through these trades and make sure I'm not trading against any long-term level through here, because I want a high success rate. And I know that if I'm taking a trade right here, then there's a very high probability that the trade's probably likely to fail. And so therefore, I just by doing this one thing with my trading, guys, has decreased my losses. At least 60% of my losses that I don't take now have been because of that. If that makes sense. Meaning before I take them, but now because I know how to read the higher time frame charts, I don't take those trades now, and my losses have decreased massively because of that. Therefore, my win-loss ratio massively has gone up as well too. So let's go over the weekly chart here, guys. And we can see that, once again, this whole weekly chart up here, guys, is very, very, very interesting. We know that there's a whole bunch of area resistance right up the top here as well. And we know that we're definitely, even with the transports, right, we're definitely hovering around this whole trend line through here is definitely hovering around that level through there. And we're not really doing anything here on the transport. Yeah, I'm not really seeing anything that's either telling us it's likely to break up or it's likely to break down. We've just been squeezing up, and it looks like we may be sort of all right, we may be sort of filling in this area here as time goes on in the markets there. So yeah, really, really, really interesting to see that. So that's what's happening through there, guys. Let's go have a look at now. So that's the indices there. Let's go have a look at silver and gold right now, guys. So silver and gold, let's bring this up here. I'm going to bring up the daily chart here for a short term, then I'll continue to go at the long term, and we can go from there. Look at the transports now, just sort of going sideways on that daily chart. So I'm going to bring up, whenever I'm looking at my charts, guys, I never bring up my charts to just one. If you're looking at your charts like this here, where you're just looking at it for just 1 month, that's not a lot of time to start to see like the small picture, big picture. So I look at my time frame at least 3 months of time, at least 3 months. If not, go do a 6-month view and then get a good view of where your stock is at, and then go from there. That's the short-term picture. Long-term picture is when you start to look at the weekly chart over a couple of year period, and the monthly charts, and so on and so forth, just like I've been talking in today's session there. And once again, guys, if you like this sort of stuff, then make sure you go to johnsflashsale.com to get that $7 trading course that I'm getting right now. That is definitely going to help you out there with stuff that I'm talking about here right now. So if I go back to the daily chart right now, I'm going to go back to silver and gold here. Look at this silver and gold chart. Isn't it just beautiful, right? Is it about to start, right? So that's the title of this session here, right? Is it about to start? And what I'm talking about is it about to start with the markets itself, right? Because if we look at silver and gold right now, we're really starting to hold its ground through here. Meaning, look, this bottom through here, we're really starting to hold here. Is this going to be some sort of double bottom through here? So one bottom through there, and then one bottom through there. I've got to use this arrow so you can see my cursor. It's really, really interesting. So So one bottom there. Is it going to be a bottom through here? So if we start to see a nice break up and out of this level through here, guys, then it's going to be really, really, really interesting to see what's in store for this. We definitely know we're in this bit of a lackluster pullback through here, but my goodness, guys, this whole thing here, if I go to my weekly chart now, this whole level through here, and if I squeeze my chart right up again, this whole level through here, this whole sort of section through here is just a very, 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 very weak pullback. So what we have in the scheme of things here, let me just share this with you here, okay? So let me just bring up the good old snagger tool. All right, I'm going to snag at this. What we have here, guys, and this is something called reading the psychology of the markets. Okay, reading the psychology of the markets. We have buyers and we have sellers, okay, in the markets. And when we start to view the markets, we can start to identify, okay, we can start to identify where the strength is. And so if you look at this here, right, look what we have here. We had strong buyers. So notice how the leg up here was pretty vertical. And then guess what we had? Notice how we actually had weak sellers through here. Look at all those, see that pullback through there? Notice how it was very weak. What I mean by weak is look at the angle of this pullback, right? Very, very, very just lackluster. Now, a strong pullback, right, would be like that, where it'll just have a very, very strong pullback. Meaning something like this here, right? That was strong there. See how that leg there was strong, it was straight down, but this leg through here is weak. That's now strong buyers, weak sellers. So, and what we need to what we now need is we now need to see, are we going to start to get a breakout through here like this? Because if that's the case, it's likely to continue the previous leg. So if we had strong buyers and weak sellers and we start to get a breakout, we're likely to get strong buyers again for a while. Now, we never know how long that's going to be, but it's just a form of reading these markets. Now look what we're doing. We're going through what? We're going through weak sellers again. All right, we're going through weak sellers again. And you can see how this weak selling period, so once again, the pattern is repeating. So if we start to get a nice strong breakout like here, then guess what? Then we're now likely to go through, especially after all this pullback, we're now likely to go through a strong buying period again. This is also known as price and time. Again, talked about this a lot. And as you can see, guys, this has nothing to do with Elliott waves or Fibonacci levels, anything like that. What we're doing here is we're just reading what the market is telling us and not what something else is going to tell us. And that's the most important part, okay? Strong buyers, weak sellers, right? This is also known as price and time if you understand the Gann theory, which is the same thing, right? This is price, this is time. Price is when the market's making a directional move. Time is when the market's not doing much. Sideways, pullback, and so on and so forth. So we can see that that's what's going on through there. So if we do see that, and we do see this thing start to pick up through here, that's what I'm saying. Is it about to start? Meaning, are we about to start next week or maybe the next few weeks? Are we about to see the next leg? Because once the next leg is going to be even bigger than the past two legs, right? And we could say that's probably likely to, and then the next leg is probably on gold, is probably likely to get to the top of this level through here, which is this $1,800 level there. And then I do see that gold is just going to, especially where we're going here with the currencies and all that sort of stuff. I definitely do see that we're likely to see a very, very, very strong, very strong move to the upside because of what's happening right now fundamentally around us. We know that they're building up more debt and more debt and more debt and more debt and all that sort of stuff. Well, you know, very, very soon, guys, we've got, if you listen to Ray Dalio stuff, and also Ray Dalio and also Robert Kiyosaki talk about this a lot, is that there's more and more and more demand for healthcare and also pensions. So that's obviously more debt on the government as well too, for them to continue doing that. That's going to be, and as time goes on, that gets more and more and more and more and more. and the squeeze, and it's a slow squeeze. That's what the problem is this time right now. It's not like, and that's where like this year, this crash that we're likely to see, it's different than 2008. Okay, 2008, the problem in 2008 was it was banks and over leveraging on over leveraging in the property market. This time it's a government issue. It's a government debt. And the government debt, it's a slow squeeze. That's where we're not likely to get the big bang like we got in 2008. Why? Because it's not the banks something completely collapsing underneath ourselves within 6 months. Because the banks right now are pretty good. Okay, now that may be different for Deutsche Bank, but that's another story. So that's the reason why this next crash, guys, in the actual stock market itself is more of a slow squeeze, because more people, as the time goes on, more people are required to get pensions, and more people are required for healthcare, especially as people start to age. And right now, the baby boomers are really starting especially over the next 5 years or past 5 years. Baby boomers have really started to ramp up in retirement, and especially over the next, and if you look at the graph, I don't have the graph here, but the graph is just enormous of how many people are going to be required of pensions and healthcare. That's why this time, once we start to see the sell-off in the markets, it's going to be completely different to 2008. And if you put that into correlation, it's going to be a slow squeeze, not a boom like that. Like, oh my goodness, the banks are in trouble right now. And then over the next 6 months, the whole stock market falls apart. That's why it's going to be a slow, gradual move on the downside on the stock market, because the government's going to try to squeeze as much as they can out of that debt there. So that's where people that are calling for big stock market crashes right now, like today and this month, they don't understand the reason why fundamentally that actually happened before. And right now, what's going to cause what is the biggest bubble that's happening right now? Now, the auto loan bubble, yeah, the government can take that, right? They print a few $100 billion, they take care of it, it's all good, right? So, but the bigger problem that's happening with the government right now is because of that, the slow squeeze of the pensions and healthcare, and that's where you're probably likely to see it in the next stock market. Now, the reason why I'm bringing that back to gold is that's where I believe over the next 5 to 10 years, gold is likely to see the biggest bull run of history. So anyone that's holding gold, even if you just bought GOD or the SLV, is gonna be over the next 5 to 10 years, as this thing slowly squeezes and the government gets into more debt. Now, the thing about the government debt, guys, is that even though they're in more debt, they can monetize that debt, right? They can do things to monetize it, because it's in, if you listen to Ray Dalio stuff, the US right now is in a lot of debt in its own currency. In its own currency, and so therefore what's happening is that they can actually use that to monetize it, so they can balance it out as well too. But there does come a point where they can't do it anymore, and where that's where interest rates are affected. If you notice that they only got to forget exactly what was the interest rate. What was that interest rate? Let me just double check here. So the United States Fed funds rate, the interest rates. Let me bring this up through to here. All right. So as we can see, if we look at this Fed funds rate through here, the Fed funds rate only could get to 2.5 this time. That's not a lot. Before what? Before it started to create so much havoc in the stock market. Why? Because it's a government thing. And this is the point here where when the Fed funds rate got to 2.5%. That was the point where now it's going to start to create a lot of problems on the government, because of, as the Fed fund rates raises their interest rates, so does the payment of the government, right? Because it's an interest rate. That's the reason why now things are backing off, as it's creating a lot more flexibility with the government, and then they can keep doing what they're doing now. That's where, like, negative interest rates is going to be, this thing's probably heading back down to zero now. as they continue to do what they're doing. So, so that's the reason why, guys, this whole next downturn, and when you think about that fundamentally moving forward, we know what to expect in the stock market. It's not going to be a big bang because it's different. 2008 was a banking crisis where they over leveraged for like 5 or 10 years. This time, it's a government debt crisis with healthcare and pensions, and that's going to, and as time goes on, it squeezes it and squeezes it and squeezes it slowly because the demand for the government help is going to be a lot more there. So that's why gold in itself is going to be the biggest bull run in history in gold. It's probably already started right now. So you'll probably look back in 10 years time frame saying, wow, wouldn't it be good to buy gold down here? Or even with the GLD. So that's when you're looking at GLD and the gold, and then also the silver price as well too. That's where these prices are going to be enormous, absolutely enormous over the next 5 to 10 years. Why? Because of exactly what I just walked through there just then. So if you can start to make sure that when you're approaching the markets, don't listen to people that say it's going to crash today, or I know the exact high and the exact low. No, we don't know. In fact, we're probably likely to get to a 29 or 30,000 Dow, maybe even higher than that, right? Before we start to see things starting to be rolling over. But we're not getting any sign of even a top right now in the markets, right? Because the market will start to roll over. Now that's the stock market. The silver and gold price, guess what? Now we're starting to form a very, very, very big major bottom through here. I definitely see, and now I'm a very technical trader, guys, but if you're looking for long-term, like what's likely to happen over the next 10 years, silver and gold is, oh my goodness. And that's where silver and gold, and even like things like gold stocks, like the GDX, is just enormous, right? Because look at this here. Once we break this level here, we have a little bit of resistance around the $40 level there. But this thing's probably racing up to 55. Like, this thing's just going to go crazy over the next 5 or 10 years. And that's where, like, long term, right? Long term, we're going to see the biggest, fundamentally, everything's bringing into what's happening right now with this here. So we have the GDX here. And we can see GDX just recently starting to slightly break out. It's not exactly break out. This is the daily chart here. So we're starting to slightly break out right here. If I go to the GDXJ, now GDXJ, this is one that I'm excited about. If I go to my weekly chart, look at this here, guys. Like, this thing is just the gold miner stocks. Oh, this is the greatest wealth opportunity of our lifetime. It really is. It's the greatest opportunity of our lifetime because, like, this thing has been going nowhere, guys. And this is, once you understand, with the markets, you've heard the old analogy, right? The calm before the storm, right? Now, what does that mean? That means when the markets are very, very quiet for quite some time, it's the calm before the storm. So if you look at, let's just go back to gold here for a minute. All right, let's just go back to gold here for a minute. I just use this analogy here, right? So if I bring up my Snagit tool here for a minute, right? Look at all this point through here. What was this here? This is like 6 months here, right? 6 months. This was the calm before the storm. Now this is the daily chart here, okay? This is the daily chart. So this is the calm period before we see the storm period. What are we getting right now, right? We're getting another calm period through here before the next storm happened. That's the daily chart. But if you go back to the weekly chart now, right, and if I go back to the silver price now, or actually, you know what? Let me just go back to GDXJ because that's what I was talking about there. You notice here. Let me bring on the good old Snagit again for you. You'll notice, guess what? That we've had this whole calming period. How many years is that? 1, 2, 3, 4, 5, 6, 7 years of calming period. That's a massive calm. That's a massive calm. And once this starts to waken through here, it's going to absolutely go nuts. Now, not vertical. We're not going to see one month like that or 1 week like that. It'll probably have a very strong few months and then we'll have a nice pullback here for a while, go sideways for 3 or 4 or 5 months, and another 4 months, and then stuff like that. So that's the reason why it takes time for these things to unroll. But as a wealth generation type of investment, this is the calm before the storm. All right, and then same for the GDX as well too, right? The GDX, same sort of thing, right? The calm before the storm. And that's where like I look at silver as well too, right? This is silver price, and the silver is just, oh my goodness. The silver or the SLV price, depending on what you want to do, right? Now, if you wanted to trade this, the SLV price, you can. But same thing. Look at this here. Look at all this calming period through here. It's done what? Nothing but go sideways. That's the calm before the storm. The calm before the storm with the markets. Remember, it's just resting. But once it starts to break, and we definitely start to see a move up above 20 into 22, you better believe the bull market has started, and it's probably started already, right? We're probably, as we're starting to build legs through here, it's probably started already. And then through that time, over the next 5 to 10 years, as fundamentally things start to come into place, which is what? The next downturn is a government debt bubble, which is squeezing off healthcare and pensions and all that sort of stuff. This is where it goes wrong. Right? And once again, guys, what I'm talking about right now fundamentally, technically we talked about technically stuff as well too, right? Reading the charts, trading systems and mindset and so on and so forth. And that's what I've got in that trading course for $7 at johnsflashstyle.com. But you can see, right? You can see what's happening through here, right? You can see what's going on through here. And that's why, guys, this is the greatest opportunity of our lifetime. And I keep telling my private clients, right? With my private clients, they have my trading strategy, and then they have my scans as well too to do the scanning. So we can have all our trading done in 1 hour. So that's what I have there. And then we use the techniques as well too. But I always tell my private clients that when you start to look at the market as a whole, it's very clear. It's very, very, very clear what's going to happen over the next 10 years. The next 10 years is probably going to be what we call the lost decade in the stock market, because probably not much is going to happen over the next 10 years, as in growth. But it's not going to be the lost decade in silver and gold. It's going to be the best decade it's ever seen. Because as things start to get more of a squeeze on the government, it's going to put a pressure on the actual economy, stocks, and so on and so forth. But then as that happens, silver, gold stocks and all sort of stuff are likely to soar. Now, without me even knowing any of the fundamentals that I'm talking about right now, without me even knowing any of that sort of stuff, if I just look at the chart itself and I look at silver, this here on silver, let me bring on good old Snugget for you guys. On a technical basis of understanding fundamentally how these markets work on a chart basis, this is the calm before the storm. On a chart technical basis. Backed up now, but because I also understand the fundamentals about this, right? Now, I don't trade fundamentals, guys, right? I have a trading system. I wait for a chart pattern to set up. I get in, I hold it for 2 to 5 days. And within that, I can pick up, 50, 100%. My latest trade that I got out of just recently picked up almost 200% return in less than a week, right? That's the sort of trade I'm doing with options with that there. So I trade the markets. I trade technically. When I'm looking to invest, which means holding long term, I'm also using not only technicals but fundamentals behind it as well too, which simply is like understanding where we are in this cycle, what Ray Dalio calls cycles, and then when you start to see, you can see clearly where things are going over the next 10 years. And if you position yourself properly, you can do so well. All you need to do is position yourself and be patient. Now, I also do say that don't load all your eggs into just one thing. If you think silver is going to be an amazing thing, or the SLV, and you're going to load up on the SLV or the actual silver price, and that's all you're going to do, then I would say start to portion your portfolio. That's what I do, right? I have a portion of my portfolio that I'm looking to just capitalize on long-term massive growth trends, And then I'm in there day by day, right? Doing my day by day thing. And then I have some longer term trades. So you better believe, guys, I'm positioning myself for the next 10 years, right? And not only me, but for my kids as well too. Like I've actually got accounts set up for my kids where I continue over time, put more money in that. And guess what I'm actually buying? Guess what I'm actually doing with that? With that money that I put into, like I got 3 kids, right? So I got 3 separate accounts for them. Right? I just put a little bit of money in there every month or every 2 months. And guess what I'm doing with that money, right? It's going straight into their trading account. And then guess what I'm doing? I'm buying some more GDX. I'm buying some more SLV. I'm buying some more gold. And I'm just buying it and then sitting on it. I'm just like, that's their long term. Because by the time 10 years comes, guys, they're going to be very, very, very happy. Now, I even told my kids this. And my kid said, Dad, am I going to be a millionaire in 10 years? I'm like, say to my oldest son, he's now 11. So he's going to be 21 in 10 years. Crazy, right? I was like, you may be, of the accumulated growth and all that sort of stuff, and plus the dividends and all that sort of stuff in the next 10 years. My kids might be millionaires even by the time they're 20. That's crazy, right? That's crazy. So this is why it's really important that when you see people on YouTube and see people out there that are really, really, really starting to emphasize on the big crash and all that sort of stuff, and the next crash is going to be the worst in history, and and all of that, you got to understand, okay, instead of taking their word blatantly, what's so important about that is that you say, okay, you know what, I'm going to say, okay, I understand what you're saying, but tell me why, right? Why is the economy going to start to shift now? Why did the economy start to boom? And why is it going to shift in the next 10 years? We had 10 years of big bull market. We're probably going to have 10 years of what Ray Dalio calls actually sag. Why? Because of, once again, the demand on the government debt, because it's a government debt issue, not a banking issue this time. The banks are actually doing quite well, right? The banks right now in the US are liquid, and they're only leveraged, I think, 3 times now, where before it was like 13 times. So they're way over leveraged. That's the reason why it was such a big bubble through there. So that's the reason why it's important. So that's what I tell all my private clients all the time, is that if you can position yourself, right? Position yourself right now. So we look at the trading. Make sure you keep trading your strategy. Keep trading that. Keep running your scans every day. Keep looking for the trades every day, and keep doing your trading, right? In and out, very short term. 2 to 5 days, or at least for a couple of weeks. Cool. You're doing that and generating income from that. Then take some of that income you're making and then pull aside into a separate account and start to use that to leverage for wealth generation. Because right now, if you understand the fundamentals or the concepts I've just walked through just then, you understand fundamentally why things are going to happen over the next 10 years. And it's just a very, very, very simple concept of the 2008 was a banking crisis. So that's the reason why we had the Big Bang. Right now, it's a government debt crisis with healthcares and pensions. So it's going to be more of a slow squeeze instead of the Big Bang. That's going to take maybe 2 or 3 years to completely unfold, right? Or as years and years and years go on, right? And then so therefore, if you look at it from the market perspective as well too, the stock market perspective, like we haven't even formed a top yet in the market, right? There's not even a top yet in the market. So after the actual top is formed, so we haven't even formed a top here yet. Now we may be at the very high point, but it takes a while for this thing to start to maybe come back down a little bit, come back up, start to complete a top, and then the bear market is probably going to take a couple of years from there. So we haven't even formed a top yet, let alone start the bear market. So it's just really, really interesting that's what's going on through there. So that's what I wanted to cover with you there, guys. It's just something so amazing, guys. It really, really, really is. If you can start to do well on both fronts, meaning you have a good, successful trading system, and you have good risk management, then you get into trades, and you're doing that day-by-day activity. That's what I do. I do both. I do my day-by-day activity, which gives me really, really good income. Like as I said before, my latest trade that I got into just recently, or got out of just recently, it delivered almost a 200% return with options in less than a week. I actually talked about that. People say, what stock was that? That was actually this WBA stock. I entered here, and I talked about this yesterday, but I entered here. I wrote it up for a few days, and I was out, and then the option just went ballistic. And I'm like, thank you very much. I'm out with that profit. So this thing's probably going to continue up a lot more from here, probably up to here. But my trading strategy is this one here was a short-term trade, so I'm in 2 to 5 days. So that means within 2 to 5 days, once I start to get a really good profit, then I'm out. But I was also waiting for it to get to the top of this trend line. So I had a very high probability it was going to get to the top of this trend line. Remember I said at the start of this session about those long-term charts? Then the long-term charts, that's what's happening through there. So that's what I wanted to cover there, guys. Once again, guys, if you like this sort of stuff, then make sure you grab the $7 trading course. You're going to absolutely love it for $7. And start to use that sort of stuff there, guys, in that stuff there, to start to look at the market in a different way by reading charts, trading systems, and mindset, and so on and so forth. At johnsflashsale.com. Let me go now to let me go to now. I want to let me now go to the questions, guys. I'm gonna go through Q&A now. So if you have any questions there, put them in the chat box and we'll go through it. Someone said have a look at TVX. This thing is on a steaming movement to the downside. So I know a lot of people are probably trying to buy this right now. Do not try to be going long in a big bear market, because you may be right. And probably 9 times out of 10, you're going to be wrong. Just like someone I know who says every single month the market's going to crash. Market just keeps going up. So, yeah, I definitely wouldn't want to be touching this at all. This thing is just getting, this thing may even just go down to zero. Look at it here, right? Just a descent down there. So, don't touch VIX at all. Don't touch this thing at all. Let's go through to JNUG. Oh, JNUG. Let's have a look at here. Where are we here? Where are you, JNUG? Here we are, JNUG. Cool. So this is the JNUGs. So the JNUG is probably... Oh, isn't that interesting? It's a 3 times bull market. So the JNUG itself... All right, so this is what I'm seeing through here right now on the JNUG. If we start to pick up through here, I'm seeing that this is what happened last time on the JNUG, where we had a massive rise up to 600. So I would say that once we start to get a break above this 100 level, that'll be the clearing for me. What I mean by clearing is like we've been down here for quite some time. Like we've been down through here through quite some time. So once we get a break of this level here on JNUG, let's go to the monthly chart. Let me see if I can see anything on the monthly chart here. Yeah, that'll be that there, right? So let's go back to the weekly chart now. So we can see that that's what's been happening there right now. And so once we start to see that, all right, once we start to hold here, we can start to, once we start to break this level here, once we start to break 100, then we're probably likely to start to see some big moves, right? This is the 3 times junior minor index. So we're probably likely to see as gold and silver, the GDX and GDXJ start to pick up as well too, then that's what's probably likely to happen through there. BYND. All right, so this market's on a very big, what's this here? Beyond Meat. Oh, a lot of people have been trying to trade Beyond Meat. Firstly, we've seen this long-term chart, right? This long-term chart has been very big on the downside. So what we've done now is that we've gone down, we've gone sideways, we've gone down again, and now we're just going sideways again. So this Beyond Meat has just been on a massive downward slide. So trying to buy Beyond Meat right now would be a very risky thing, because we could be just getting ready. We could just be getting ready to go for another leg on the downside. If I go to that weekly chart once again, yeah. So I definitely wouldn't want to be buying it right now, because we're in a big downtrend through here, big downward movement, and you never really want to get into a big downward movement as the market starts to as the market starts to head down through here. So we've got this big down movement through here, and now we're probably likely to see a down movement through there. So never buy when the market's going down, and never try to short the market when the market's going up. Right? What I mean by that is that if we see the stock market, right, it's just continue to step higher. We've had these pullbacks, yes, but never try to position yourself to go short. Like right now, if people think that the top's in right now, you may be right or you may be wrong. So that's what I think through there. AG, First Majestic. Let's go to the weekly chart here. Yeah, AG is one that I'm really excited about. I think once we start to get that break, once we start to break above these highs up here, so once we start to break above this sort of level through here, which is where it is right now, let's go to the daily chart. Once we start to get a nice break above there with some volume behind it, then I think this is on its way up to probably around that $20 or the $18 level through there. So this actually looks really, really good. Really, really good, right? Look at that. Look at my moving average. See how strong that moving average is, right? So it's got strong, what we call momentum. We've got all this period through here. We've got a nice move up, period through here. Once we start the break, we're probably likely to see a very, very nice move to the upside with that. So very nice. Let's go through here on ACB. Yeah, big massive downtrend. If you're trying to buy this right now, then don't trade that. I did trade it. I did actually trade this weekly chart here, back here. Right, so when we started the breakout on this candle right here, so I did trade it here. Why? Because it was going up. This was the calming period. Now we've got a very big breakaway bar. So I knew it was probably like that, and then we started to see a big move up from there. Now that line up here, this line up here, that's where it actually stopped. But that's where I traded it. Right now, I'm not in it now. I got out when I was up there. I moved my stop up and then got stopped out. I think around $9 or something like that, $9 or $10. Yeah, somewhere around there. I think it was around $9. I got stopped out as I moved my stop up. But right now we're just on a very, very, very big downward movement through here. So very big downtrend through here right now. Look at all that. Just continue to go down, down, down. So trying to buy it right now, if you're trying to go long right now, it's very, very risky. And shorting it right now, it's important that if you're looking to short something for trading purposes, mean you're looking at it for a short term, that you have some sort of a setup that you're looking for as well too. So that's what I'll see through there. Maestro says NLST. I wouldn't touch this at all. It's a very low liquid, low stock. It's not really going anywhere. It's got a very, very, very ugly volatility to it. The problem with trading stocks like this is it's very, very, very unpredictable. So you might be very lucky to get a spike, but you may not be. And it's very, very, because it's low liquid, it's a low volatile stock. There's no smooth price action to it. It's not a smooth chart at all. You want to get into stuff that has a smooth chart. ACST was the next one. ACST. See, this is actually a lot better, right? The price action here is a lot better. We're in a bit of a trading sideways range right now. A bit of a sideways range through here. Not really much going on that daily chart. Let's look at the weekly chart here. Right, so the weekly chart has had a nice move up and now sideways. So we've had this very nice move up through here. And now we've had this sideways period through here. Wrong one. And now we've had this sideways period through here. As we can see, right? As we can see on the daily chart, that's what that sideways period through here is. So if we start to break above 25 on a short-term basis, we're probably likely to race back up to say around that $3 level there. Let's bring up, say, weekly chart here for a minute. Yeah, if it breaks that 225 on a short term, probably a short term move up to $3. And then if we start to break $3, it's probably on its way up to around about that $6. You can see that over time that there's these levels through here that the market has respected. Now remember I said about these long-term levels, right? So we have a level through there around $6. Then we have a level around there, probably around that $8-9 level, and there's a level up there as well too around. So these would be the major levels, guys. You'd probably want to keep an eye on for if you're looking at this as a trading perspective, because as we go along, right, and as I just squeeze it up a little bit more, and let me just squeeze this down, you would know as time goes on that we're looking at these levels through here of where we're likely to find a little bit of a probably a pause in the markets. A pause simply means it probably have a bit of a pullback at those times. Probably likely to run up to those levels there. Short term $3. Once we leave $3, we're probably on our way up then up to $6. Not right now, guys. Not right now because we haven't broken out. We need to wait for the breakout to tell the market for us to see. Okay, is it likely to start to move in that direction? Because this thing could just hold here and completely unfold to the downside like that there. If that happens, then we're probably heading back down towards the lows down here around 50 cents. SRNE. Okay, so we're getting a bit of a, we've been going down quite some time. We've got a bit of a gap up with a massive volume there. I had 112 million on this week. This is, okay, so we definitely had this low level through here. We got a bit of a gap down. Right, so this point through here, with a bit of a gap down, went sideways through here. So I had this massive sideways, and then we had a bit of a gap up with this big breakaway bar. So I would say, let me see where this trend line comes involved. Where is that? So it's probably through there. Let's go to the weekly chart here for a minute. I just want to see if I can see anything from a much larger perspective. So we definitely had that through there. As you can see, right? You can see how this point through here, this major resistance level through here, now became all this support level. Now we're bouncing up. This is probably likely to rise. I'd say around that $6 level there. Looks like it's going to be a level where it's probably likely to rise to. So because we're definitely not in a downward trend now. Why? Because we had this high, we had this lower high, and we've had this sort of bit of a lower high here, or this lower high here. But now look what's happened, right? We broke above here with a big breakaway bar. We've broken up now, and then we had this breakdown through here. So this breakdown through here, this point through here is a false breakout. Why was it a false breakout? Because as you can see, right, we found this support level through here, all the support level through here. Okay, and then we had support, then it broke down, did nothing, and then broke back up. When you see this sort of action, it's probably likely to be an end of trend indicator. It happens a lot, right? An end of trend indicator. And then we had this bit of a gap up with a lot of volume, which tells me it's probably likely to be a breakaway gap. A breakaway gap is the sign that it's probably likely to start the next move. Yes, we did nothing for the last 3 days, but the overall picture is probably likely to start now to heading up towards that $6 mark. Now, that may happen within a week. It may take a few months to get there. But that's what I'm seeing there right now with SRNE. And as you can see, right, it comes back down to reading that chart there. So if you like this stuff, guys, then go grab that trading course, johnsflashsale.com. Some traders say gold will go to $13 level. What do you think? What do I think? Or what the chart tells me? 1300. No. Actually, you know what? I'm not going to say no because it may happen. We may continue down. But I doubt gold is likely to go to. We may be heading down towards there. I doubt it. Only because of what's happening. Especially if we start to get a breakout. Like if we start to get we start to get another nice breakout through to here, and we start the breakout, we're probably on our way up to 1800. I don't see 1300 happening again. Buying silver miners. 1988 or natural. I wouldn't just be buying any miners. Excuse me. I wouldn't just be buying any miners, because buying just any miner is risky, because even like with the stock market right now, right? The Dow Jones and the S&P have been rising. Look at the S&P 500. It's been rising all-time new heights. But if you look at some of the stocks within the S&P 500, they've been in bear markets for quite some time, right? So some of the stocks, just because the stock market is S&P is going up, doesn't mean they're going up. What I mean by that is just because we see a big bull run in the silver and gold miners, those indexes, GDX and the SIL, GDXJ and the SILJ, gold stocks juniors, then that does not equate to every gold and silver stock going up. You just want to be able to trade that, right? So when I'm doing my analysis, when I say gold stocks, I'm talking about this GDX, right? When I say this thing is likely to go ballistic, then I'm talking about this GDX. Why? Because it's based on that market itself. Gold miners have been holding up really well with gold weakness and market continued to rise. I wouldn't say gold weakness. It's not gold. It's definitely not gold weakness. It's just a gold pullback, which was if you guys were watching me if you guys were watching my YouTube channel back, back when we were getting a big rise here on gold and also silver, I was saying, don't FOMO on the market. Don't FOMO on the market. We're probably likely to get a pullback. Actually, guys, can you guys give me a Y in the chat box if you were watching my videos back then, as August, September, and as this market's rising, and I kept doing videos. Don't FOMO. Wait for a good time. Wait for a pullback, and then all that sort of stuff. And look what's been happening ever since. We've just been getting a nice pullback. So we're not. It's not weakness. It's just a nice pullback in a nice healthy bull market right now, especially gold. Gold is definitely in a much more stronger bull market than that. Tony says, after watching your YouTube videos last year, I decided to sign up for a $7 trading course. Fantastic. That's great. You said, what's the next step? Tony, the next step is to go in there and watch all the videos. If you like that and you'd like to become a private client of mine, then just email me at howtrader, HOWELL trader@gmail.com. And I'll be happy to talk to you on the phone and see whether it's a good fit for you or not, right, with that. But the first step is just to go into that training course and start watching what that training course is. Jose, you said BURL. I'm pretty sure I know what that is. Yeah, I'm not sure, Jose, what you mean by this one here. But I'm not going to talk about too much on this one, Jose. But if you go log into the membership area, because you are a private client of mine, then go watch this week's coaching session that I did, and you'll be able to see what I think about this stock here. All right. So I'm not going to talk about too much about this because I'm not going to go there. But yeah. Because I know where you're going with that as well too. USO, we actually looked at this yesterday, but USO, which is the oil is in one big sort of, if we go back to this, if we go to a monthly chart here, we're definitely in one big massive triangle pattern. And with this is obviously oil here, as I said before. So we're in this big massive long-term triangle pattern of this monthly chart through here. Big, massive triangle pattern coming down through to here, all through to here as well. So we're in a, depends on where, if we start to break below 50, we're probably on our way down to 30. If we start to break above 70, then we're probably on our way up to 100. So that's what I'm seeing there. So if you take that back into USO, then USO is, wow, look at USO. This is the monthly charts. If we start to get a break above this $15 level, then the USO is probably likely to start to see a rise back up towards this $30 level from there, because there's nothing there. So once and we've got this very, very, very sort of sideways period through here, all through here, very, 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 very sideways period through here. So once we start to get a break above 15, then we're likely to start to see a rise through there. Made good money on GLD today. Okay, cool. Let's go have a look at that hourly chart. Okay, cool. We had a bit of a gap down. Look at that. Gap down. Gap filled. Gap filled. Cool. I think next week we start to see a raw bull run. Maybe. The GOD, we need to start to see a break above, at least, say, above this trend line here, break above that sort of 140 level on the GOD before we potentially start to see the next bull run to happen. Once that happens, we're probably likely to run to 148, or should I say 145. And then from there, if it breaks that, we break 145, then we're probably on our way up to 175. So I'm excited about that. FCX short. FCX short. You short FCX? Masterable. No problem. No problem, guys, at all. Actually, guys, give me a Y in the in the chat box there if you enjoy these live streams that I do. Instead of, say, the normal maybe 10 or so minute video, these live streams where I can just go through some stocks and just do some other stuff. Give me Y if you actually enjoy this sort of stuff. And if you're just watching the replay, leave a comment below and let me know what you think about these a lot more detailed sessions that I'm doing right now. Bit of a Christmas gift for you guys leading into Christmas. You're short this stock. I wouldn't say there's actually a lot more bullishness activity happening right now. So I wouldn't want to be short, because the downtrend is definitely not, like, I'm not saying I'm wrong or right. I'm just listening to the market. What the market is telling me this, that we had a low, lower high, lower low, lower high, lower low, or actually should I say double bottom. Now we're rallying up to make a higher high. So that is that's a potential change in trend. That is not a bear market. So yes, we may get a little bit of a pullback, may be the word, and then we start to see a rise. Or it may just go sideways for a bit and then continue up from there. So that's what I'm seeing through there. So, all right, guys. Well, that's it for me today. Get on down and go get that $7 trading course at johnsflashsale.com. I hope you enjoyed today's session, guys, and I will speak to you soon.